Hey, good morning, everybody. Shane here from the Brookings Home Team, powered by Century 21. It is a cold Monday, 8:15 in the morning, and thanks Stacy for coming in on this cold, snowy day. Hope you all had a good weekend. And guess what? I forgot to shut that off, so let me do that real quick. There we go. Never fails. All right, that's what happens when you go live. So 8:15 Monday morning, and Stacy here from Guaranteed Rate. And
it's great too.
It's great too. Yeah. Guaranteed Rate to talk about this morning's Monday morning mortgage tip.
Okay, so today we are going to talk about credit scores or FICO scores or things. People call it different things. It's your credit score basically. I've had a lot of questions lately on, well, my Credit Karma says my rate or my score is this, or my Discover statement, or my whatever. And so my suggestion to people always is sometimes they're accurate and sometimes they're not. And it can go both ways. We see it both ways. Sometimes what you think your score is when you come in to apply for a mortgage, it's a little lower or it's a little higher. I had somebody last week and she said, I don't know, I think I'm about a 620 maybe. And I said, well, okay, well, let's just do an application and find out. She was a 726. Wow. So that's a big difference. Yeah. And sometimes people just don't know. So when you apply for a mortgage loan, we pull a tri-merge or a credit report from all three bureaus. So we take the middle score of each borrower, take the lower of the two. That's how everybody does it. You don't get to pick and choose and say, well, my spouse makes more money, but I have a higher credit score. It doesn't work that way. So you just have to take the middle score. That's what's determined for rate adjusters. Some programs have a minimum credit score, but my tip to you is don't always take what you're getting on an app or on a statement, that a free credit report basically, as gospel, because sometimes they're way off.
Yeah, so, you just never know when they've been updated or anything like that.
Well, and there's no risk when you're getting your own score. So when a lender pulls, there's a risk grade associated with that. And so we have a higher grade that you have to qualify for a mortgage loan, for instance. Mm-hmm. It's a 30-year commitment typically, versus when you apply like for a car loan. Right. That's maybe a short term. So those things are different sometimes too.
Perfect. So. All right. Good information. That is today's Monday morning mortgage tip. Thank you, Stacy, for that.
Thanks for having me.
You bet. And we will not be here next Monday, but the Monday after. So 2 weeks. I think it's the 17th of December.
Close to Christmas.
It is, yeah. We'll probably do one more this month, and then it's Christmas and New Year's. So only a couple here for the month of December. But thanks, everybody, for watching. So if you know of anybody that you think would benefit from this video, please feel free to tag and share them in this. And if you have any questions for myself or for Stacy, please direct message us. Comments in the section here, or whatever it takes to get a hold of us. We'd be happy to answer you privately or on our next episode here. And you can get a hold of Stacy on the top, on the bottom, on the sides, wherever your device allows you to see that information. I'll have all of her stuff there for you. Thanks again for watching. Stay warm. Congratulations to the Jacks on a playoff win here. Mm-hmm. They're moving on again, so congratulations to them. And you guys have a great week. We'll see you in 2 weeks. See you later.
Bye.